What's going on, traders? Welcome back to the channel. Today I'll be recapping my swing trade with ticker symbol KO, which is Coca-Cola. I went ahead and bought some call options on Thursday and sold them the following day on Friday during the first few minutes of the market open, making a total profit of $1,750. So let's go ahead and jump right into the video and start recapping this trade. Coca-Cola is the perfect example of why I always use multiple time frames to do my technical analysis. So what we're looking at right now is the 10-year, 1-week chart in which each candle is representative of 1 week and the total time span is of 10 years. And so what we can see here already is a clear level of support along the 200-day simple moving average, which is this pink line here. As you can see, bouncing off of this line here and then pushing up, bouncing off of this line here, pushing up, bouncing off of this line here, pushing up, bouncing off the line here, and then pushing up again. So let's go ahead and take a closer look at the 1-year, 1-day chart. Same thing here. We're seeing that the 200-day SMA is acting as a level of support here, here, and here. Furthermore, the MACDs are showing a crossover or a convergence. So as you can see here, convergence here, and then having the blue moving average break above the white, blue break above the white. And so when I point at this MACD, it is all relative to the price action directly above it. So as you can see here, the blue moving average breaks above the white, and we can see that the price action starts to push up. Same thing here, starts to push up here. And so most recently we see the same thing, and we're starting to see that it's pushing up as well. Taking an even closer look at the 180-day, 30-minute chart, we can see that Coca-Cola started to form what is known as a wedge. And so what a wedge means is that there's indecisiveness between buyers and sellers as to where the price direction is headed. So sellers will quickly overcome buyers, as we can see here, this huge sell-off, and the same thing will happen and vice versa, where buyers will push out sellers and push the price action up, and then we can see that the same thing is happening where sellers overcome the buyers, pushing the price action down, and then up, down, up, down, up, down, until it converges at this point. And at this point is where we either see that the price action decides to take an uptrend to the upside, or it begins a downtrend towards the downside. And so this wedge, like I said, is indicative of indecisiveness, and we can see that because there are lower levels of resistance, meaning that the price action is peaking at a lower level, and there's also higher levels of support. Until, like I said, when it converges here, we're either going to see that it breaks above the previous resistance, making new highs, or it's going to break above the previous support, making new lows. And so that is usually indicative of where the price direction is to follow in the coming days. And so what I look for when I see a wedge is to see a clear break above the previous resistance and a new level of support that is easily identified through the moving averages. So as we can see here, the last previous resistance was right here at $47.61. Let me go ahead and draw a line here for you guys to see that. This was the last level of resistance, right? As we can see here. It breaks above that resistance here, sells off, and so when that happened, once it broke above that resistance, what I did is I went ahead and took a closer look, 10-day, 10-minute chart, and I started to see, okay, once it broke above that resistance, where are levels of support that I can easily identify? And the same thing happens here. The 200-day SMA is acting as a level of support at the 10-day, 10-minute chart. And so what I did is that, I picked up some shares, or rather some call contracts, right here along this SMA and the 10-day, 10-minute chart, because it's where I expected my level of support. And so I think I sized, my position size was about 200 contracts here, and it broke above that support in the next couple of hours. What was this? I think I picked up my shares at around 7 in the morning, or rather my contracts, and then around 9:30 a.m. it broke above that support. It broke below that support. But I still saw potential in Coca-Cola, and so I actually doubled down on my position here, and then it started to push up, coming towards the close of the market. And so this was definitely a riskier play because there was a break of pattern. However, I still saw potential in the trade, and so I doubled down on my position, really only risking about 25%, 0.25. 0.25%, which is in the contracts, I believe the volatility was equal to 10 times the share volatility. So 0.25, a quarter percent was 25% in terms of the contracts. And so risking 25%, a quarter of my position, but I had the potential of making, according to my technical analysis, roughly 1.75, which was over 100% returns on this trade. And so that's why I saw that the previous resistance, the previous high on the previous day, in my mind, was going to act as a level of resistance. And so I planned on getting rid of my trades, as I previously said in other videos, is where you expect the resistance, you want to sell before that, because there are times where your analysis isn't exactly correct, or there's a small pullback that you didn't anticipate, which is exactly what happened here. And so I thought it was going to push up to this level of resistance, and so I wanted to get rid of my shares here, or get rid of my calls here. Unfortunately, that did not happen. It faced resistance here. As you can see with this candle here, buyers are trying to push up, but sellers are aggressively pushing it back down. And so this green candle is really a representation of the end, a momentary end to that bullish uptrend, and then selling off. And luckily, I was able to get rid of my shares along this area right here during this small push back up. And so I did make, like I said, a profit of $1,750. However, had I sold here when I was seeing clear resistance, I could have profited approximately $5,000. So what I'm going to go ahead now is transition to live footage that I actually took in the morning of this Friday, when I plan on selling my shares or my contracts. And I'm going to go ahead and show you guys how we can clearly see that this level, this price level of $48 is acting as a level of resistance, and why I should have gotten rid of my shares sooner. And I think it was really not necessarily greed. I just had a plan in mind, and unfortunately that plan didn't go accordingly. You know, at the end of the day, still making some profit, but definitely could have gotten rid of at least half of my position during this high at the market open. So let's go ahead and transition over to the live video. So what we're looking at here is my Robinhood account to the right, and then my Thinkorswim charts directly to the left. And what I'm doing right now is highlighting my returns going into Friday, seeing as I started my position on a Thursday. So I had about $1,300 going into the Friday, and what I'm doing right now is showing you guys the previous resistance with that top red line, and then the line that I'm about to change the color of is where I planned on making my exit, which was at $48.08. Like I said, you always want to get out a little bit before where you anticipate resistance. So really important, I want to note that the top chart is a 10-day 10-minute chart, and then the bottom chart is a 10-day 2-minute chart. Directly below what I'm going over with the arrow right now are the level 2s, which represent the number of buyers and sellers. And so we can see that the $48 level is presenting a huge level of resistance. And right here, we're about to see the first 10-day 10-minute candle establish itself. And then below, I'm looking at the 10-day 2-minute chart. And so as we can see, directly below the 10-day 2-minute chart, or overlapping the 10-day 2-minute chart, we can see the buying candles, which are the green candles, and the buying volume directly underneath it. As you can see, the volume is decreasing as it previously tried to push up above $48, and then the volume during the sell-off is increasing, forming this kind of upward staircase. And so at this point, I definitely should have sold my position. Unfortunately, I didn't, and so I ended up getting rid of my shares. Half of my shares here, as you can see, if you look at my Robinhood directly to the right, it's at $14,400 right now. Bam, cut into about half at $8,000. I got rid of half of my position there as I saw that it started to experience resistance along the middle VWAP. And then a little bit later in the day, I went ahead and sold the rest of my position, which totaled out my profit at $1,750. I know this was a really long video, and I do appreciate those of you guys who made it to the end. My purpose in uploading this video was to provide a detailed look into why I enter a position, why I exit a position, and to review the mistakes that I very clearly did make in this trade. I hope that this provides some value for those of you who are watching, and I hope that you guys have a great day.